Welcome to Contractor Cuts, where we cover the good, the bad, and the ugly of growing a successful contracting company.
Welcome to Contractor Cuts. My name is Clark Turner.
And I'm James McConnell.
Still.
Great. Always and forever.
Great to see you guys again this week. So today's topic, financial maturity.
Yes!
It is so fun.
Oh,
man. This is what everyone's been waiting for.
I love it.
So
I love money.
Really, we're breaking this down into 3 different stages of what you should be doing as a contractor when it comes to finances. Kind of crawl, walk, and run is the way I built it, as to you got to be doing the basics.
Hey, the Lord built it that way.
That's
okay?
right. Thank you.
Not you. Crawl, walk, run. That's the way we all do it.
That's true. So crawling is what you got to be doing if you're a one-man show, no matter what. This is kind of the basics of running a company, bare minimums. Walking is going to be, okay, I've got that stuff down. I really want to start taking ownership of my finances. And then running is, hey, this is how you operate a full-fledged construction company when we're looking at how to manage money. So today we are covering those at a kind of a higher level. And let's get started.
Let's do it.
All right, go.
Okay. Crawling is the Lincoln Park. These boots were made for walking. I don't know what her name was. And then Megan Bush running up that hill.
Perfect. Thank you. So getting started with like the very basics of what you should be doing. Number one thing I've got is to start tracking our finances. I need you to have a separate credit card for your personal and your business. I want to have a credit card that's strictly for business purchases, and we don't use personal on there. And we have a personal credit card that is for yourself. But what I want to be able to do is have a credit card that I can pull and suck straight into QuickBooks. And in there, I can start identifying all of my purchases and categorizing where my money is going. Again, this is the basics. This is getting started. Having a business card. Now, a lot of guys use their a debit card out of their bank account. It is what it is. If you're a Dave Ramsey person, don't want credit, okay, that's fine. But I don't want you using your personal credit card, your personal finances, and intermingling them. Number one, it's going to kill you with an audit. You can't grow that way. Number two, it takes so much more time to really figure out, okay, that purchase was for that job. This purchase was for my house personally. Oh, here's where me and my wife went out to dinner. And all of a sudden, your company account's paying for all of your personal stuff, and now we have no understanding of where your dollars are coming and going from because we can't tell the difference of personal versus business. So we want that as a separate card. We want to be able to, everything that we purchase on that card, it should be a business expense. So if I'm taking my wife out to dinner and we're doing a deep dive on what the year looks like for the company, great, I'm going to pull out the company card and use it. If I'm taking my wife out to dinner for our anniversary, I'm taking my personal card out and doing it. But either way, we need to separate those. This allows us to, in the crawl phase, using QuickBooks, we're going to suck in our credit cards and our bank accounts into QuickBooks. We're going to tie them together, and they pull right into our favorite page, the bank transactions. That page is where we're going to start defining our chart of accounts through there. And the chart of accounts is literally the categories that we are going to put our spending into, as well as really any other categorization that happens in QuickBooks.
Like what?
Travel, entertainment, if we're taking the team golfing. We have gas in there. So in your chart of accounts, when you're setting it up, it's adding in, so if you have a clean QuickBooks and I go and I'm driving around for my job sites and I swipe my card and it's at BP and buy some gas. When it sucks into QuickBooks, it's going to say BP, $89, and I'm going to open that line item and say this was, I'm going to name the category, and it's going to pop up a box so I can create a new category, which is in my chart of accounts, and I'm going to create gas. And I'm going to select that's under expenses, not under cost of goods. For me, cost of goods is materials and labor spent on the job site. Everything else that I'm spending is going to be because it's part of the company. So insurance, it's got its own line item. My insurance charged my bank account. I itemize that as my insurance payment, and that's in my expenses. And once you can set these up as you go. You don't have to go in there and build out your whole chart of accounts. Anytime you have a charge, should this go in one of the categories I've created, or should I create a new category for it? I literally did this yesterday. I created a new category in our QuickBooks for ProStruct for a totally separate thing. We've been around for a long time. And I was like, oh, it'd be great to track this separately. And the categories, all we're doing with that is, so when we print out a profit and loss page, I can look at it and I can see exactly where my money's gone. And I can be like, oh, wow, we've spent a lot on X. That doesn't look normal. What's going on? And it allows me to dive in and be like, oh, wow, this is a great way that we've used this in our construction company is we know how much it costs to drive a vehicle around. We've got kind of averages per month of what a project manager should spend. And then all of a sudden, 1 month, our gas price doubles. And we dive in and look, and we realize, oh, this guy's filling up his gas Friday. He'd fill it up again Sunday and again Tuesday. And he didn't have any jobs running at the time. Like, what's going on? That's personal spending, and he's using our gas card to fill up his personal car. So
that's when I go to his house and I find something that he values, like a trinket or a barbel.
Or his kneecaps.
And I'm like, hey, buddy, this is what's happening now. This is mine.
So identifying the category that you want for everything, it's not a lot of work. It's literally, I swiped my card 17 times this week. Okay, that was for materials. That was for insurance. That was for gas.
Let me tell you a story about a time when it was a lot of work because I didn't do it for a year.
Oh, jeez.
And I had 1,200 things to itemize.
That's the problem.
That's the problem.
And to be honest, doing this the first time is going to take you a couple hours. And then after that, when you're at the crawl stage, you can do it once a month in 30 minutes.
Yeah.
When we get to the walk stage, we're doing it weekly, and we'll talk about that in a second. But in the crawl stage, all we need to do is say, okay, that was for this, that was for this. And that way I'm starting to lay a base foundation of understanding my data of where my dollars are going.
And let me speak to the emotion of it.
Yeah.
Because I'm an emotional guy. It's going to feel, if you haven't been doing this, it's going to feel like you're at the bottom of a dog pile. And what you don't want to do at the bottom of a dog pile is panic, because then you lose all the air in your lungs. So you need to calm down. You need to tell yourself, this isn't the end. I'm going to get out of this dog pile. And you just slowly let everybody get off your back.
Yep.
You might have to get on the phone with QuickBooks for a couple hours and talk to some guy.
Or your coach.
And it's going to happen. You can do it. You're able to do it.
Yeah, it's work. It's not hard work. Once you know how to do it, it's just work. It's not difficult. It's just you got to go through. And here's the thing. Excuse me.
What did you just?
Did
you just swallow your uvula?
I inhaled and exhaled at the exact same time.
We need somebody. I don't think that's possible.
It is possible. All things are possible. You know. If you were categorizing, it doesn't have to be perfect. Okay, that's in like a great example. We've got. I do a lot of traveling for coaching. We've got a travel line item in our QuickBooks. And in the beginning, you just throw everything into travel. Now we've got subcategories. So underneath travel, we have travel accommodations, travel airfare, travel car rental, travel meals, because I want to see where each of those categories are broken down. Now, do you have to get that in the weeds? No, absolutely not. But once you start growing in your financial maturity, then we're going to start really getting in the weeds. Our annual retreat, it used to just be one categorization. This is any spending on the retreat we put there. Now we have swag. I think is one of we're buying sweatshirts and books and all this. Like we have a category underneath there of entertainment. We have a category annual retreat accommodations, annual retreat, and so you can really get in the weeds with it and get really micro, so we can understand the dollars and our budgeting and what we're spending. Day one, you don't have to get there. Day one, throw everything in gas, everything in materials, everything.
Or auto.
In auto. There's vehicles, whether you want vehicle maintenance or get vehicle gas and have those sub. It doesn't matter how you set it up. What I care about is that we can see where your dollars are going. And so when we're crawling, when we're in the beginning stages, I've got a separate credit card. I'm pulling credit cards and bank statements into QuickBooks, and I'm categorizing where where all my dollars are going. And I want to look at my P&L once a month. In the coaching program, if you're any of our coaching programs, whether it's you're in the growth or executive, I meet with you the first week. James and I will meet with you the very first week of the month. That's where I want you to be looking at your P&L and bringing it to that meeting. I don't want to sit there and break it down unless you don't know how to do it. I want you to bring me some numbers that we're going to look at in that meeting of what profitability did you hit last month? What was your total revenue last month? What are we projecting for this coming month? Looking at those numbers to where we have a spot that we can raise a flag or really see the data of what's happening in your company. So that's number one. That's crawl. That's basics, no matter who you are. I don't care if you're out there swinging a hammer. I don't care. Any sort of company should be doing that, even outside of construction. I want you to categorize what you're spending where and know where all your dollars are going. All right, so that's crawl.
Okay.
Next step, we're going to walk. The next step up. Okay, I've got all that. I'm doing that really well. I want to really own the data and know where my dollars are going. I want to be financially literate. Not financially. I want to be financially literate.
Yeah.
I want to know what I'm doing and understand my numbers. I want to read the data and be able to use it as a guideline for my decision making. That's stepping up into walking. So what does that look like? We are now going to start filling out, and if you're in coaching, you're probably already doing this. If you aren't doing this yet, it's because I'm trying to get you through the crawl stage. But we have a projections worksheet. And what that is, it lays out every single job that you are currently doing, that you're about to start doing, or that you think you're going to land. You know, anything above a 50-50 shot of landing, we're going to put on the projections. And we're going to project out month over month what you should be invoicing over the next 4, 6, 8 months with the jobs that you have in your pipeline. And I want to see, all right, March it should be 250,000. April I got about 300,000 worth of work. June it's down to about 100, but I've still got some jobs that I'm going to try to land. July it's down to about 80,000 right now. What we want to see is that pipeline getting filled and us making decisions based around those projections, so we can see the money expected coming in. And not to get in the weeds, but that spreadsheet, we have 2 different sections where it adds up total available versus what's actually been approved and in progress. And so you can kind of see, like, I've got 400 grand if I can get these people to sign, but if I don't get them to sign, we're only got about 200 grand this month. So we can really start identifying, hey, one of these jobs we got to land, but we can't do 400K. We don't have the capacity. So 2 of these jobs are going to have to push next month if we can land them. And so we can use that and go back to the clients, and that's a sales tool. Hey, I've got capacity for about 1 more project in April. I love it to be you, but we got to get signatures if you want to reserve our calendar. If not, it's going to be a May to June project. What's your timeline look like? That is a really strong approach to a client who's on the fence about signing or getting moving, because then it's
I don't want to miss out.
oh shoot, yeah,
Scarcity.
So, it's a scarcity.
Scarcity drives sales.
Thanks, James.
You're welcome.
The other part of that is, even if your calendar's not full, they don't know that, right? So it's
So lie.
not lie.
Yeah.
No. Plus, it's easy to say, hey, I'm filling up my calendar for April. Do you want to get on it? I want to make sure I reserve you a spot on my calendar. Mm-hmm. I might have no other jobs for April.
You are filling up your calendar.
But I'm
for
filling
April.
up my calendar
Yeah.
right now. And I'd love to reserve you a spot on it, right? That's always the conversation with our clients. But we're looking at projections to where the QuickBooks that we're logging is looking at what's happened in the past. It's good data to understand what's happened already to us. And walking is us shifting into looking at the future and what's coming, right? And so as long as we can start categorizing and looking at the past, now we're looking at projections. What's coming up next? We're looking at job costing. When we're getting from crawl to walk, we're changing from just identifying this purchase at Lowe's as a material purchase. Now this is a purchase of materials for 123 Main Street. And we're tying every purchase to the job it was bought for. And that's where we're going to start getting job costing down to the penny per project, so we can look at profitability all the way down on the micro. What?
It was very Nixon of you.
Profitability. So I want to look at, when we get into the walk stage, we're doing projections. The other thing that we start doing in this phase, and what if you're a one-man show, I start doing with you, and you start doing with your employees, is we do what we call our POW tracker, which is our Project Manager Action List Tracker. This is a totally different tool for the front end of making sure clients' experience is really good from our company. But the backside of the tracker is every single week we're writing down the profit percentage. Every single week we're writing down how much how much I'm going to be invoicing, the projections this week and this month. And I'm also writing down how much I've invoiced to date, as well as the total of the job. So I can see on this tracker after 12 weeks, my profit started at 38%, then went to 36, then went to 32. Now it's at 28, but then it jumped up to 29 because we added a line item to it. And I can see how accurate the profitability is for my project manager because I'm tracking it weekly as the profit goes up and down, as well as the total revenue on the job going up and down. So combining some of these trackers that we're using along with our QuickBooks and our data is really helping us to get a grasp of where our money is going and where the holes in the bucket are that are leaking out that money. Something else to do during this walk. Once we have all the crawling done, when we're in the walking stage, we're doing a 1 hour time block each week for finances, a financial time block. Well, Clark, what do we do during that time block? You asked that.
Clark, what are we doing during that time block?
Thanks for asking, James. During that time block, we're going to tie every purchase to an expense or job address. Like I said, we're tying everything to the jobs. I'm going to match my deposits and payments within QuickBooks. I'm going to make sure that all my money going out and money coming in was accurately accounted for. I'm going to have no line items left in my bank transactions, and I'm going to do once a month, I'm going to reconcile my bank accounts. I'm not going to go into what that is, but you're reconciling is pretty much getting a paper copy of your statement and making sure that everything on your statement is actually in QuickBooks. And then you reconcile it, you say that's done, and it's off. So in that time block weekly, we're looking at those things, and you're spending an hour a week assessing those numbers, laying out your projections, and making sure all your data is accurately accounted for in QuickBooks and in the software. So that's walk. Once you're doing that, if you've got all of that stuff going, the next level up is run. It's going to be using this data as the map of where we're headed as a company, as the decision-making filter is going through the dollars. So what does that look like? Every penny is accounted for, in, out, what's expected to be spent. I'm looking at projections. I'm saying, okay, in the next 3 weeks, we should be invoicing about $120,000. So when that comes in, I'm going to be paying off this line of credit. We're making financial decisions based around the data that we've collected from the past and the projections and expectations of the future. We're doing those weekly and monthly projections on every job. We're getting it from our project managers. Hey, what are you invoicing next week? What's this next month invoicing look like? Hey, this month you said you're going to hit 100K invoicing on this job. We're at 10K and we're halfway through the month. Where's that other 90 coming from? This is twofold. Well, number one, it allows me as the owner to throttle up and down the spending and the payments and what needs to go out and what my expectations are and what money I need to hold on to that's coming in. This also holds my project managers accountable for what they said they were going to invoice, which means if they're not invoicing it, their timelines are slipping and they're not being a good manager of that project because they're not getting things done that they were supposed to. Now, there's outlying circumstances. It rained and we couldn't paint the outside of that house for a full week. That slowed us down. Well, are you looking at your job and saying, hey, we're going to pause on the exterior. Why don't we shift the painters to the inside and get that done, even though we wanted to do that in a couple weeks, right? And so that's what a project manager does. How do we get this done quicker?
Or like we're doing footers for an exterior deck and we're supposed to have rain coming in. Well, that's problematic because you can't have the holes filling up with water and guys working in the rain. But maybe we could set up a tent, like a tarp off the roof and have a space. And we don't lose a week and we keep the project moving. Like that's a win-win. The client's going to love that. Your crews are going to love that. We're all going to love that.
And the only way to do that is not waking up this morning figuring out what we're going to do on the job today.
Yeah.
It is, like we talked about the other week, building out a calendar, having time spent looking at what's coming up on the project. But also, I know my boss, I told him that we're going to be invoicing 80 this month on this job. I got to figure out how to get that done. So let me look at the Gantt chart I've set up. Okay, what else can I move around on here? What if we set up a tarp at that house? I know it's supposed to rain starting Monday over there. We're going to get over there late on Sunday, get tarp set up, really get it dried out to where we can keep going. Okay, and you're pulling those triggers ahead of time because you're game planning for the job. But the accountability of what I projected and promised my manager is now I know that he's using this to make decisions for the company. And so my responsibility as the employee here is to get that invoicing done. So there's that accountability on them, as well as if I'm asking my project manager on our PAL meetings every Friday to bring me projections for next week, he has to be looking at his Gantt chart this week for next week. He has to be knowing, okay, I should be able to invoice this, this, and this if we do it. And I should be sending an invoice this week for what I'm doing next week. So James, I'm invoiced 10 grand for next week. The following week, we should invoice about 20 grand because if you look at the Gantt chart, this is going to happen and this should be done. That is a healthy project manager, whether it's you or the guys that are working for you, is being able to project that stuff and look at it. So that's where we're running, because I'm taking that data and I'm putting it in what we call our general manager accounting worksheet. The GM worksheet is something that is next level, and it's really good once you bring on an office manager. This worksheet shows every bill that goes out weekly, or every bill that you have and what weeks they're due and when they go out. It shows how much money's in the account, and then you have your projections that you put in how much money's coming in. And so as they come in, it goes from a projection to in the bank, and you switch it over to another column, and then it does all the math for you and says, hey, at the end of this week, if you collect all that money, you'll have $83,000 left in the bank. At the end of this week, if you collect all that money, you'll have negative $10,000 in the bank. Okay, crap, that's not good. Where are we going to shift that money? So when we're in this position, when we're running, we're looking at a weekly understanding of the dollars, and I'm playing for the next 2 weeks. Hey, we got some extra cash this week. Why don't we go ahead and pay down that Home Depot line of credit? What if we go ahead and make a deposit on those cabinets that we know are coming up in 2 weeks? Why don't we just go? And so I can start making game plans around the dollars for the next few weeks based on what's happening this week, because I've got your projections and I've got the bills going out. Sounds really complicated. It isn't. It's just getting there. It's the baby steps to get there. We're using the accounting worksheet. I've got my projections worksheet. I've got my pals that are pulling all that money together for it. And now at this point, I should be tracking my gross profit percentage, and my net profit and my net profit percentage. Those are very important numbers when you're running when you're at the run spot of dollars. When I'm looking at every single job proactively, I should be able to track my gross versus my net, my profit percentage and total rev on each of those. And again, if what I'm saying sounds like Latin to you, that's okay. We can get you there. It's taking these steps. This is kind of the advanced version. But where we need to get is tracking all of those things. And then also like forward-looking cash planning. We're being predictive, not reactive. If you're doing all of that stuff, you are going to be in a very safe zone. We're going to see issues coming. We've had times where it's like, hey, if we don't sell more jobs in 3 months from now, we're going to be in a world of pain. What's going on? How are we doing this? And we should be thinking that way. If you're looking up saying, I wonder if I'm going to have anything for Monday, it's too late. Yeah. It's too late at that point. Those are kind of the three stages. The one statement I put on here is crawl means you can see the money of what's happened. Walk means you can control the money. And run means you can predict the money, right? I like that. Those are kind of the three different levels of like, I could see where my money went. I'm categorizing everything. I can there's a trail that's organized of what happened, and I can adjust the future by looking at my data of what's happened. Walking is I'm controlling the money. I can see the data and I'm figuring out what's coming. And then running is I can predict what's going to happen because of all of the stuff that I've planned out and I'm really owning. Those are kind of our main three categories of this. As you're growing maturity-wise, one question that I always like to answer here is everyone's like, well, I'll just hire an accountant. They're going to organize my QuickBooks. They just handle that for me.
Clark, can I just hire an accountant?
Thanks, James. Great question. This guy here. Accountants assist in the busy work. And so there is a spot for an accountant in your company. You are hiring an accountant, not a CFO. And what most guys do is they say, I hired an accountant. Well, what does your QuickBooks look like? I don't know. They just make sure I don't get dinged with my taxes. Great. That is kind of before crawl. That is laying on your belly as a baby. Like you're not even crawling yet because you're just paying your taxes and making sure you're not getting hurt by that. What I want an accountant to do is once I get to the walk stage and getting into the run stage, is they can be the person doing data entry for me sometimes. They can be helping me pull some reports and look at things. They can't run my finances. That's like saying, the difference of these two is if you look at any large company, there's a CFO, the chief financial officer, and they've got a whole bullpen of accountants. The accountants are pulling the data together. The CFO is making decisions around that data. And if you don't know how that data is gathered or where it's coming from or where it's going, you can't make any decisions for your company. You're hiring an accountant to run your company and make decisions for your financial future. And so an accountant is great. It's not the solve. It's not how you fix your finances. You need to understand QuickBooks. You need to have an understanding of how your finances flow. You need to be able to predict stuff. You need to know what your profit percentages are. And all of this stuff is overwhelming for most guys coming in. It's not. It's one step at a time. Just do these steps that we've laid out. It's getting to the next stage, buying more time because we're now getting more and more out of the field and more into the office to manage a company. And getting into that position allows us to do a lot more of this tracking, a lot more of the understanding, and putting in the safety measures to make sure that we're financially moving forward and not 12 months later in the exact same position we were today. All right. Anything to add to that?
Don't look at me like that. No, you nailed it. That's exactly what I was going to say.
I think one thing that I would say is someone like, I'm just not good with computers. I don't like QuickBooks. I don't know how to do that sort of thing. I'm not good with math or whatever it is. James learned QuickBooks.
It's a great way to put it.
And
it's a really fair way to put it.
If James can learn QuickBooks, anyone can learn QuickBooks.
Anyone can learn QuickBooks.
And here's the thing. When you get in, and I was talking about this yesterday with someone, they're like, they're just learning QuickBooks, and like, I got to get a PhD to there is so much to learn in this. And what I say is, I need you to learn about 3% of QuickBooks, and let me show you in coaching what that is. Because
they're looking at all the buttons.
Yes. And
it's like, you don't need 80% of these buttons.
If not more. Like QuickBooks is built to run every company that's on the planet. As a back-end accounting software for them. And
not a sponsor.
Actually, yeah, we resell it.
Sponsor.
But because of that, it's so robust that like literally 95% of it you don't use. So what we do, and ProStruct 360, our software, manages your QuickBooks for you. So when you put a client in and send them an invoice in our software, it creates a client in your QuickBooks, push the invoice over there, and once they make a payment, it goes there, matches up everything. All you do is say, yep, that payment was for that invoice. It's correct. It manages everything for you. So once you come into our ecosystem with the software connected to QuickBooks, and you're in coaching and we're helping you really kind of go through all of this stuff, you're doing, like I said on here, I show up, I go to my baked transactions, and I'm tying my spending to jobs. ProStruct 360 goes into your QuickBooks and pulls all of that data into our software and job costs on the job card for you. So you can see the materials you spent on every job, where you spent it, how much you've budgeted versus how much you've spent, if you've got overages. All of that happens in our software. So it's really not a lot of thinking. You got to understand what a P&L looks like, how to categorize expenses, and how to tie those to those categories. That's it. That's all you got to do.
Yeah.
From there, let an accountant handle it. That's a great time, once you understand that stuff, to pass it to an accountant to really do your taxes and make sure that everything's clean and working well. But it is not difficult. It just feels so overwhelming because QuickBooks is so robust.
Yeah.
It's not. Let us help you with that. If you're coming into coaching, we'll spend some time. Until you understand it and the connection, we're there for you, help make sure you understand what you should and shouldn't be doing in it. So That's it. That's our financial maturity. If you have any questions or want our help with anything or want us to look at your numbers or anything else, hop on a free phone call. If you go to contractorcuts.com, you can set up on my calendar a phone call with me. I'd love to hear about your company, what you're doing, if you're interested in any sort of coaching or help. ProStroke 360. The 360 is about a la carte services. We help everywhere in your company, from software to coaching to paperwork to anything that you need help with. We're here for you. We do hiring with guys. We go through the process of helping them identify the right project managers and training them and bringing them on and best practices of that. Like, there's every aspect of construction companies we support. And so if you have any sort of needs, hit us up. Let's talk about what you're looking for and see if we can help you with that and build your company to the next level. All right, James, thanks for joining us this week.
Yeah, no problem.
All right, guys, we'll talk to you next week.
Bye.
Bye.